Hello, oral health students. My name is Sinead Brydon. I'm a business lecturer based at Inverness College. Normally, I would deliver this session face to face with you or through a VC, but given the current circumstances, it's not possible. Hence, we've created the PowerPoint with a recording. Just a bit of background to me, as well as obviously teaching business. I've got a strong background in marketing, having worked for myself, and I've also helped other people set up in business too. You'll probably find as we go through this session that you've got questions that arise in your mind. I know that this is a recording and I'm not there to answer your questions live, but my contact details are at the end of this presentation, and you're very, very, very welcome to get in touch with me with any questions that you might have, and I'll be happy to answer them, possibly over the phone if that works for you. You might be wondering what preparing to start a business has to do with you, an oral health student. The reason that we cover it is that you have to do it as part of your course, but on a practical level, it may be that the nature of your future employment as a dental practitioner means that you might have to work on a self-employed basis. Even if that's not the case, even if you are employed, you will have a good understanding of the challenges faced by maybe small business owners. And if you can demonstrate your knowledge of what it's like to be in business to a business owner or a manager in a business, if you're trying to sell yourself for employment, it will be attractive to these owners and managers if you have some idea of what it's like to set up and run a small business. What we're going to cover today are some of the main points that you really need to know around SME statistics and why it's important to have an understanding of that. We're going to think about legal entities. We're going to think about the legal entities in relation to a sole trader and a partnership, and we're going to think about the pros and cons of both of these entities. We're going to move beyond just looking at things like legal entities and also start to think about the impact of being a business owner on other aspects of life as well. We'll have a brief look at business planning, and we'll round up by looking at support organisations that may be able to help and assist you if you're setting off on a self-employed journey or setting up a small business. In addition to this presentation, you may want to go on to the UHI library site and locate an ebook called the Business Plan Workbook. It is a very useful guide to setting up in business. There's a range of practical advice that you can use in there, and I wouldn't suggest that you're going to read the whole thing, but it may be that you dip in and out of this book and start to look at some of the aspects that may be relevant to you either now or in the future. What I would say is that there have been a number of editions of this book. Please make sure that you're using the 2015, that's the 8th edition. There's a link on this slide that will take you directly to the ebook. Please make sure that you're logged into the library site initially, or it may be that you can't access it. So make sure that you're using the correct edition and make sure that you're actually logged in to the UHI library site before you try and get on and read this ebook. Sometimes when we think about business, it is the very well-known business people that maybe come to the forefront of our minds. So when I ask people to explain a well-known business, they quite often tell me about Richard Branson and Virgin, or Duncan Bannatyne and Bannatyne's gyms. But these people are very few and far between. When we think about business in the UK, most businesses are small to medium-sized enterprises, and they're the lifeblood of the economy. So without these small to medium-sized enterprises, our economy could collapse. So if we look to 2019, there were 5.9 million private sector businesses in the UK, and that's an increase of 300,000 from the previous year, and almost 2.5 million more since 2000. If we think about what these businesses actually look like, only 1.4 million of these these businesses employ people, whilst 4.5 million of them are sole traders. So you need to think about what that actually means. It is so important that you recognise that just because a business is small or someone is working on their own, that they still have a massive impact to the economy. So our economy in the UK is predominantly people working on their own. So if you go into work on a self-employed basis, you are one of these people and you are contributing directly to the UK economy. So these statistics should show you what SMEs look like in the UK, but they should be starting to get you to consider the importance of them. There are many different ways that we can register a business in the UK, and we call that the legal identity of the business. And this is something that you should consider before you enter into either setting up a business or becoming self-employed. You need to be able to identify what the legal entity of your business is. So there are a number of different legal entities available, but the ones that we're going to look at today are sole traders, people working on their own; partnerships, that's a business that will have 2 or more people; and limited liability companies. As you can see, there are other legal entities that I've not highlighted. What I would suggest is that if you have an interest in these particular legal entities, is to go back to the workbook that I highlighted on slide 3 and have a read in the academic text on what these different legal entities may be. When we're considering the different legal entities available, there are pros and cons to them all. And we're going to look at each of them and consider what they look like and what the pros and cons are of sole traders, partnerships, and limited liability companies. But I'd like to start with sole traders. These are businesses that are run with one person. And if, as a dental practitioner, you enter into a contract which means that you are responsible for your own employment, you will become a sole trader. So you may set up a business and not even realise that you've set up a business. This happens in many different sectors. If we think about a hairdresser, for example, who has to rent a chair and they're responsible for their own employment, they're a sole trader, they're a business person, and they're one of these millions of people within the SME economy that are feeding into the lifeblood of our country. So don't think that if you're working on your own, you're not important. You are very important to the economy. So when we're thinking about a sole trader, the proprietor is the sole owner of the business. So we're picturing one person here. It's the most simple form of business. So when we're thinking about setting up our legal entity, it's very straightforward to do, and we'll think about how we do that. You don't really need any legal formalisation, but there are things that you will need to do, and we'll think about that in more detail. You don't need to pay any registration fees. Keeping your records and accounts should be fairly straightforward. If we think about making money, you get to keep all of the profits, but you're personally liable for any debts that your business runs up. So we're looking at best case scenario here of making a profit. If you're a dental practitioner, you're more than likely going to make a profit. But some people, if they're sole traders, may be in a position where they run up some debt when they're trying to get their business off the ground, and they're personally liable for that. So we've said that it's the most simple form of business and you don't have to legally register the business, but you do need to register yourself as self-employed with HMRC. You need to be able to pay over your taxes yourself. It won't be coming out of your wages directly, so it's really important that you do this. You need to register as self-employed with HMRC. If we think about how we run the business, you're going to make all of the decisions on how you manage your business. You will need to raise the money for the business out of your own assets and/or with loans from banks or other lenders. If we think about being a dental practitioner, there's probably not going to be too much involved in terms of decision making and having to raise money to enter into that type of sole trader arrangement. But other sole traders will have different responsibilities, and it's important that I point that out to you. If we're thinking about the types of records that we need to keep, in particular in relation to accounting records, I've mentioned that your tax will obviously not be coming directly out of wages because you won't be paid a salary by an organisation. You'll be responsible for billing people and paying over your own taxes, but that will happen on a yearly basis. So you'll have to make an annual self-assessment tax return through HM Revenue and Customs, with whom you'll already be registered. So they will be aware that you're working as a sole trader, and they will contact you to ask you to submit an annual self-assessment tax return. So this may be something that you do yourself if you're quite comfortable, but people quite often use accountants to do their annual self-assessment tax return as well. You're responsible for keeping records to show your business income and expenses. So you're going to have to be quite organised here. But again, if that's not something that you're comfortable with, an accountant might be able to help you do that. So we've already mentioned profits. All of the profits will go directly to you as a sole trader. When we're thinking about tax and national insurance, because you're self-employed, your profits are taxed as income. So you will have to pay over tax on any profit that you make. You also need to pay over national insurance. So when you're employed, these things happen automatically through PAYE and through your wages. If you're a sole trader, there is nobody doing that for you. So you really need to think about the records that you're keeping and how you're going to go about communicating with HMRC for your self-assessment tax return. Is that going to be something that you take responsibility for, or is it going to be something that you need help with, and you might think about some accountants' help here? When we're thinking about liability, as a sole trader, you are personally responsible for any debts run up by the business. So this means that any assets that you've got, such as a home, a car, or any money in the bank, could be seized to pay off debts. Your personal assets are not protected if you're a sole trader. There are advantages and disadvantages to all of the legal entities, and if we're thinking about sole traders, there are some real advantages here. You're completely autonomous, you've got a lot of independence, you can make your own decisions, you don't have anyone to report to, it's very easy to set up and get running, and you get to keep all of the profits. It sounds great, doesn't it? However, if you're working alone, there may be a lack of support. You may feel very isolated and alone. You've got unlimited liability for any debts that the business runs up, and they would have to be paid by you personally. So we've thought about things like houses getting seized or cars or any money in the bank. What I would say for dental therapists, if you're self-employed, it might be that you know of other therapists or hygienists that are in the same boat, and you can give each other a bit of support that way. So it's really getting you to think about what the advantages are, but also starting to preempt some of the disadvantages of being a sole trader as well. So we've thought about people working entirely independently, a sole trader. We know that they're business people now and they feed into the UK economy and they're very important. If we're thinking about adding more people to the mix, so this will be at least 2 people, it could be possibly more, we're thinking about a partnership here. So this is when 2 or more people share the risks, costs and responsibility of being a business. So what we need to understand here is that it's 2 or more people coming together, but they're both or more of them, if there's more than 2, are really being treated as self-employed. So we're thinking back to maybe sole traders and the responsibilities that come with being a sole trader, but we're now still thinking about those responsibilities, but entering into that with other people, so 2 or more people. If we're thinking about what this might look like in practice, We're thinking about how the decision making may be shared. So usually each partner shares in the decision making within the business, but that's not always the case. There may be people that have expertise in one area of the business and they might make the decisions about that, and maybe somebody else makes a decision about something else, and so on and so forth. So usually each partner shares in the decision making. How that looks in practice might differ depending on the type of business and the type of people involved in the partnership. Like a sole trader, each partner is personally responsible for any debts that the business runs up. Unlike a limited company, which we'll come on to, a partnership has no legal existence distinct from the partners themselves. So what this means is that the people are the partnership. The business does not exist beyond the people in the partnership. So if, for example, one partner decides they've had enough and they're exiting the partnership, or somebody dies, or somebody goes bankrupt, the partnership cannot continue. It's got to be dissolved, although the business might still continue. So it might be, in that situation, they have to look at the business and think about changing the legal entity. Like a sole trader, a partnership is relatively simple and flexible, but partners do not enjoy any protection if the business fails. So if we're thinking about the practicalities of a partnership, each partner needs to register separately with HMRC as being self-employed. What tends to happen when a partnership is being formed, it tends to be a meeting of minds. It tends to be two or more people that have skills that are complementary, and they have an idea that's similar, and they want to set up a business together and utilise that skill set and that enthusiasm for the business idea. However, things can change further down the line, and not everything will stay rosy in every partnership. So what should be done at the beginning is to draw up a written agreement between partnerships. We call this a partnership agreement, and this should really be done with some professional advice from accountants and solicitors. So I've seen firsthand what happens when people are trying to exit a partnership and there is no partnership agreement, and it can get very messy and very bitter. So what started off as something rosy and optimistic ended up in a real mess and with real upset because there was no partnership agreement put in place. So this written agreement is really important if you're entering into a partnership. So if we're thinking about the management and raising of finance, then the partners themselves usually manage the business, although they can delegate responsibilities if they've got some employees within the business. Again, like a sole trader, partners have to raise the money for the business out of their own assets and or with loans. So we thought about decision making, and I said that usually partners will share the decision making, and it can vary. There might be people that make decisions about one area of the business more than the other person, or people that make decisions about separate things. But it is possible to have a partner in the business that doesn't make any decisions at all, and we will call them a sleeping partner. So it may be an investor that's contributed money to the business and they're looking for a return, but they're not actively involved in running the partnership. If we're thinking about records and accounting, the partnership needs to submit information to HMRC, but also the individual partners must make that annual self-assessment tax return to HMRC. So a little bit more involved here than a sole trader. We've got the addition of the partnership itself having to make an annual self-assessment return to HMRC. The partnership has to keep some good records here, showing business income and business expenses. If we're thinking about the profits, each partner will take a share of the profits, and like a sole trader, because the partners are self-employed, they are taxed on that share of the profits, and they also need to pay over national insurance contributions. So again, like a sole trader, You may be quite comfortable keeping records and submitting returns yourself, or it may be that you seek the help of an accountant to do this. So there is help available for keeping records and accounts, working out the profits, and paying over the tax and national insurance. If we're thinking about the liability here, there is more to consider than just the sole trader's considerations in relation to them being responsible for the debts. So there is still no protection with a partnership. The people involved within the business are liable for those debts personally. However, creditors can claim a partner's personal assets to pay off any debts, even if the debts were caused by the other partners. So you might be a partner that has been working efficiently, working above board, and another partner in the business isn't working to the same way that you are. They might have run up debt and caused the business issues. It's not just that partner that's caused the issues that needs to pay off the debt. You, as the responsible partner, would also be responsible to pay off any debts incurred by the business. If we're thinking about England, Wales and Northern Ireland, partners are jointly liable for debts owed by the partnership, so are equally responsible for paying off the whole debt. So they're not separately liable, which would mean each partner is responsible for paying off the entire debt. However, partners in Scotland are both jointly and severally liable. If a partner leaves the partnership, though, the remaining partners may be liable for the entire debt of the partnership, and a creditor may choose to pursue any of the partners for the full debt owed if the business becomes insolvent. So, like a sole trader, there are both advantages and disadvantages of being in a partnership. So it's fairly easy to get set up and running. There's slightly more considerations with a partnership than a sole trader, as we've seen, but it's not that complicated to get up and running. If you've got more than one person within a business, you're going to have access to a range of skills and experience that the partners can bring to the business. The major disadvantage of a partnership is when there are disagreements between partners. It can become very messy and very ugly. This has been mentioned earlier on, and it highlights the importance of having a legal partnership agreement that you can refer back to if things do get a bit heated and a bit messy. There is unlimited liability, and as a partner, we can see now that you're personally responsible for any debts that the business runs up, and it doesn't matter which partner has been responsible for the debts, everyone involved in the business is then personally liable. What we've been considering so far with sole traders and partnerships is that the business really is the people that are in the business. There's no separation between those people and the business itself. This is where a limited liability company comes in. The business, if it's registered as a limited liability company, exists in its own right. So this means there is no personal liability for any debts within the business. Okay, the company's finances are entirely separate from the directors of the business's personal finances. There are more people involved in a limited liability company. So the shareholders may be individuals or they may be other companies, but the shareholders themselves are not responsible for the company's debts unless they've given a guarantee. So, for example, it may be that if a limited liability company is seeking a bank loan, the bank may ask for some personal responsibility there. Shareholders may lose money they have invested in the company if it fails. So what we mean here is that a limited liability company normally sells shares. Anyone can buy the shares on the stock market and become a shareholder of that organisation. However, if the people that have bought shares in a business then find themselves owning shares in a company that's failed, they may lose the money that they've invested by buying those shares in the company. There are more legal considerations when it comes to limited liability companies than there are in relation to sole traders and partnerships. So the Companies Act 2006 is a very important law, and it's made a number of changes that affects directors and shareholders of limited companies. So we've got three different types of limited liability companies that we're looking at. So private limited companies, they have one or more member. What we mean by that is shareholders, but they cannot offer shares to the public. If we're thinking about public limited companies, they've got to have at least two shareholders, and they have to have issued these shares on the stock market that the public can then buy, and they have to issue at least £50,000 worth of shares. If we're thinking about private unlimited companies, these are very rare and usually considered for a specific reason, and it's highly unlikely that any of you are going to enter into this. It's highly unlikely that any of you are going to enter into a limited liability company anyway, but I want to make you aware of what they are and their structure. So when we're thinking about the setup here, there's much more to consider. So with a sole trader and a partnership, all you had to do was contact HMRC and let them know that you were working on a self-employed basis. With limited liabilities companies, you need to be registered, we call that incorporation, at Companies House. So there is a multitude of paperwork, signatures, legal agreements that then need to be sent over to Companies House to incorporate that company. A limited liability company has to have at least one director who may also be a shareholder. There is a minimum age of 16 to be a director, and at least one of the directors must be individual rather than a company. So private companies aren't obliged to appoint a company secretary, but if one is appointed, it must be notified to Companies House. What we mean by a company secretary is someone within the business that deals with the legal aspects and the legal filing, and they will usually be the person within the company that liaises with Companies House and sends everything over that is required. So when we're thinking about management and raising finance, there's going to be a director or even a board of directors that make management decisions. So sometimes we can think about a board of directors in a fairly sizable company. It might be that we've got a finance director, an HR director, an operations director, but normally what you will find is a managing director. So that's the person that sits above all of the other directors and has the ultimate responsibility. Some limited liability companies, though, might be very small. They might only consist of two people. So there it might be one person that makes a decision, or it might be both, but there'll be a director somewhere that is making the management decisions. With the sole traders and the partnerships, they're usually funded by personal finances. But with a limited liability company, we might see money from shareholders, but it may also be easier to obtain bank loans, and they may also retain profits as they work through several years of business. They might be able to put money aside and dip into that at a later date. The bigger companies, the public liability companies, can raise money by selling shares of their business on the stock market, but we've already seen that private limited companies cannot raise money that way. So when we were thinking about sole traders and partnerships, we can see that they submit an annual self-assessment tax return, and the profit is fairly straightforward to calculate, and it goes directly back into the pockets of the sole traders and the partners. Profit distribution with a limited liability company is different. So we're not calculating personal tax or wages. It's normally that the profits are distributed to shareholders in the form of what we call a dividend. So we saw that records and accounts with sole traders and partnerships were fairly straightforward, and there is no legal responsibility for a sole trader or a partnership to publish any annual accounts. But that is different for limited liability companies. So a set of annual accounts must be produced, and that's got to be filed with Companies House. Companies House may then choose to publish either an abbreviated version or a full version of those accounts to the public via their website. So if you're a limited liability company, your financial information can become public, and it really depends on how big the organisation is as to how much of your financial information is published. But the information that's produced will be put into the public domain. Usually, accounts must be audited unless the company is exempt. So smaller companies tend to have a turnover that allows the company to be exempt from an audit. But if you're turning over a certain amount of money, I can't remember off the top of my head what that is at the moment, then you will have to have audited accounts. So when you file your first annual return for a limited liability company, the letter will be issued to the registered office containing the company's authentication code and instructions for use of Companies House web filing services. So if, for example, there's a company secretary within the business that has taken responsibility for filing everything at Companies House, they have to be aware of this code and the instructions so they can actually get onto the web filing services. Okay. If there are any changes within the business, so directorship may change, for example, you have to notify Companies Houses of any change. So one of the biggest differences between limited liability companies and sole traders and partnerships is this responsibility for sharing information, which then Companies House can share with the general public. So if you're interested at all, it's worth going on to Companies House and maybe searching for a business that you know, and you'll start to get a feel for the type of information that's actually publicly available. But if you're registering as a limited liability company, you've got to be aware of these responsibilities and the visibility of your company information to the general public as well. If a company has any income or profits, then that will be taxed, and it must tell HMRC that it exists and it's liable for corporation tax. So we've talked about Companies House in terms of company registration and information, and we're now thinking about HMRC as well. So HMRC is the organisation responsible for collecting your taxes, and you are responsible for telling them what your taxable income or profits is on an annual basis. What needs to be submitted to HMRC is different than if you're a sole trader or a partnership. With the sole trader and the partnership, you're doing an annual assessment tax return. What you're doing with a limited liability company is doing a corporation tax return. So this tells HMRC what the tax is on any profits that are made, and then it must be paid over to HMRC. So if we're thinking about company directors, they're an office holder of the company and therefore regarded as employed. So they've still got to pay over national insurance. So that will need to be calculated and paid over. So if we're thinking about the liability within a limited liability company, shareholders are not personally responsible for the company's debts, and on the whole, we can separate out personal finance from the business finance, but there may be occasions where directors are asked to personally guarantee any loans to the company. So that has been mentioned previously, and it's just to make you aware of that. So in general, the directors within the business aren't personally liable for the company's finances, but there will be occasions where loans are granted and people are personally liable for those. guarantees of the loans that have been given to the company. So if we're thinking about the advantages and disadvantages, I think it's quite clear with a limited liability company that we're really protecting your personal financial risk. So it's going to be restricted. So we don't have those risks of your house or your car or your personal finances being at stake, unless it's a guarantee that you've given in order to obtain finances such as loans to the business. However, we can see that there are a range of extra duties, including legal duties, so maintaining the company's public records, and also the accounting side of things as well. So what we would normally do if we were doing this via VC Live is that I would get you to start considering sole traders and partnerships and think about the advantages of disadvantages that you would consider in starting up in one of these types of entities. So obviously we can't do that as this is not live, so I've created a table of the most common answers that students come up with. Okay, so advantages down the left-hand side and disadvantages down the right. So most of these have been covered by what I've said, but I would just like to recap. So we know that a sole trader, the paperwork is more simplistic. Your business affairs are completely confidential. You've got none of this filing to Companies House and the public being able to look at your records. You can keep everything to yourself. There can be tax advantages. If your business makes a loss, it can be offset against any other income you have when you settle your tax affairs. If you decide that you're going to move beyond being a sole trader or a partnership, perhaps into a limited liability company, this conversion is relatively simple and straightforward. If we're working independently as a sole trader, you're able to make quick decisions and act without interference from others. So you don't need to take anyone else's point of view on board, and you can act now. There's no time delay. There's no faffing about waiting for someone else to give their input. And a sole trader keeps all of the profits. However, there are some disadvantages, such as being personally liable for your business debts. If things get really hairy, you might lose personal assets. You pay less national insurance, but you're not entitled to some of the benefits. So, for example, if your business fails, you won't be able to apply for unemployment benefit. It can be difficult to transfer ownership of the business to somebody else. Remember, when we're thinking about a sole trader, they are the business. And it can be really difficult to raise money to start or expand the business. If you went to a bank as a sole trader to ask for a loan, they're probably going to turn you down. You've not got the credibility or the security that a public liability company has. Okay. So the advantages and disadvantages of a partnership now are similar to those of a sole trader. Okay. The biggest difference is that the partners are responsible for the debts of the partnership together as well as on their own. So I've tried to put this point across a couple of times already in the presentation, but if one partner fails to pay his or her share, or perhaps they run up a debt within the business, the other partners have to pay that share as well as their own. And that includes things like tax as well as any debts that are run up. Okay. So we know that if we've got a partnership, we're bringing in an additional skill set to the business, which can obviously be beneficial. But on the other hand, if there starts to become disharmony or disagreement within the partnerships, this can be really, really, really unpleasant. And it can destroy not only the partnership, but it can also destroy the friendship and perhaps the business. When you look at partnerships, it tends to be people that have known each other for a fairly long time that set up these types of arrangements. So we can see that the damage goes far beyond just a failing business or unpleasantness. It can really damage friendships and personal relations also. Okay. So we've talked about this partnership agreement, and we're going to think about what that actually looks like and the types of things that we tend to see in a formal partnership agreement. So the working role of each partner tends to be clarified within this partnership agreement. So we've seen examples of decision making. We've seen examples of somebody not being involved in the business but still being a partner, that sleeping partner. This type of thing would be set out in writing in the partnership agreement. The capital that each partner has put into the business will also be stated there. This helps if the partnership is going to be dissolved in sharing up any assets or profits or even losses that the business has generated. It shows the split between the initial capital investment of each partner, so therefore they can calculate any profits or losses to the right ratio between partners. The profit sharing agreements and the payment of tax arrangements will also be set out in a partnership agreement. Any insurance arrangements will be in there. The voting arrangements will be in there. The agreement for withdrawals, salaries and expenses will be there. And arrangements for ending the partnership should be in there. And this is where it gets really messy when people are trying to dissolve a partnership without an agreement. It can be really difficult to get partners to come to an arrangement if it hasn't been set out at the start. And then you need to think about what happens if one of the partners dies, because we've already seen that the partnership cannot exist beyond the partners in the business. So if a partner dies, the business is going to end too. So this partnership agreement really needs to set out the arrangements in the event of death. We've been considering self-employment from a very practical perspective. So we've thought about the management and finance, we've thought about accounting records, we've thought about company's house and filing responsibilities. But what you really need to consider is the impact of being self-employed on other areas of life. So being self-employed can be a very positive thing, but it can also bring challenges with it. So people get involved in self-employment for a range of different reasons. For a dental practitioner such as yourself, it is the nature of the employment that you need to take a self-employed contract. So you might not be making a conscious decision to start a business, but you have. For other people, they're actively setting up businesses, and they may be setting up a business for a lifestyle purpose, so it fits in with the life that they want to lead, and they're not particularly ambitious about growing it. But you will also have other people who have set up businesses and they are determined from the start that that's going to be a growth business. What I would like you to think about now is anybody that you know that is self-employed or perhaps runs or is involved in a limited liability company, and we tend to see that they are different than people that are working on an employed basis. They've got different considerations and they tend to operate differently. Being involved in self-employment will have an impact on your life outside of work. It will also have an impact on your family's life also if you've got a family. So there is a really good report here from the Department of Business Innovation and Skills, who have a research report looking at this. So what I would like you to do in your own time is to download this and have a look through, and it should start to show you the impact of self-employment on other areas of life. If you're thinking about becoming self-employed or entering a partnership or setting up a limited liability company, it really is worth considering creating a business plan. So what a business plan will do is keep you right on this journey to self-employment, but it can also help you pitch to other people for help. So it may be that you want some expertise from somebody, or it may be that you're looking for finance, and you'll be able to persuade people much more easily to give you help or money if you've got a bona fide business plan which sets out what you're planning to do and how it's going to happen. Business planning is a subject in its own right. Within our business degree, we've got whole 12 weeks modules on business planning. So we're only scratching the surface in this presentation. So I'm just drawing your attention to the fact that a business plan is a good idea, and there are lots of different things that we would expect to see within a completed business plan. The business plan workbook set out in slide 3, this academic text that you can get as an ebook, is a really good place to have a look if you get involved in business planning. So it will go into detail on each of these different areas. But what we would expect to see in a business plan is obviously the business idea. We're concerned with the people involved in the business and their roles and expertise. The people within the business can really build credibility. So, for example, if you're going to become a self-employed dental therapist, if you can sell yourself as having your oral health degree, for example, that's starting to build your credibility. But this works for any business idea and any of the people involved. There'll have to be a skills audit and really get to the nub of who's involved in the business, and this should be presented. A business is only viable if there is a market for your business. So you can have the best business idea in the world, but unless there are people out there willing to buy your products or services, you don't have a business. So your business plan will really set out who your customers are, what is the market for your particular business idea. This should be justified through market research, and we would expect to see both secondary and primary research to back up the market presented in the business plan. Within a business plan, you should really be presenting product knowledge and also production processes if applicable. It may be that you have a fantastic business idea and you have identified that there's a market for it, but you might not have the capital required yourself to set the business up, and you may be seeking funding. This should be something that is presented in the business plan. So what is the capital required and where do you think it's going to come from? You should have investigated and presented any resources required. So depending on the type of business that you're seeking to set up, this can vary widely. So if we're thinking about you as a dental therapist, it might be things like uniforms that you need, but it's highly unlikely that you're going to have to source premises, plant and machinery, vehicles, fixtures and fittings, and so on and so forth. However, if you were in a position where you were setting up a dental practice, for example, that list would look entirely different. You would be looking for premises, you would be looking for equipment, and so on and so forth. It's not just physical resources that are considered in the business plan. You need to think about any stock that you'll need, but you also need to think about human capital or labour as well. So who are the people that you need to be involved in the business if it's not just you that's going to be running this business? It is absolutely imperative that you understand and you can demonstrate the amount of money that's coming into the business and when it's coming in. So to do that, you need to understand how many sales you're going to make. Once that's worked out, you can have an idea of what the cash flow is going to look like. So what money is coming in and when, based on these projected sales. Okay. You also need to give some financial projections. So cash flow, balance sheet, and profit and loss account as well. What tends to happen is that people setting up a business will have a particular skill set, but they may be lacking in other areas. So if you're reading down this list for business planning and thinking, oh, I've got a fantastic business idea and I'm pretty sure of the market, but the other stuff is scaring me, then it may be that you go to get some help and advice. You're not alone. At the beginning of this presentation, we set out the importance of small to medium-sized enterprises in the UK. And we're starting to see that the most important people can often be those sole traders. There are many support organisations that are designed to help SMEs. So you can get business startup advice and information through the Business Gateway Network. There's a link here. But if you're between 11 and 30 years of age, you can also go to the Princess Scottish Youth Business Trust. And again, there's a link here for your reference. What I would like to point out is that these organisations not only help you with business startup, but they also provide ongoing advice as well. So if you're already involved in a business and you've moved beyond the startup and you're thinking that you could perhaps use some advice or help, you can still go to Business Gateway and the Princess Scottish Youth Business Trust. So we've had a bit of a whistle-stop tour of preparing to start a business. We've thought about the different types of entities and some of the responsibilities that come with those. We've thought about the pros and cons, and we're starting to think about the practicalities of business planning. What I would like you to do is not to get too hung up on the stats and the nitty-gritty. I hope you'll come back to that if it's of interest. But if anyone is listening to this presentation and thinking this really applies to me, or I've got more questions and you want some help and advice, I would be extremely happy to chat to you over the phone or by video call. So all you need to do is to drop me an email and let me know that you're an oral health student and you have listened to my presentation, and drop me an email to sinead.brydon.ic@uhi.ac.uk and I will get back in touch with you. Thank you very much for listening.